I just wanna make you mine.
Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your current mortgage rate update. We are sitting currently at 3/31/2022, and we're going to be pricing out 5 different mortgage products. It's going to be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. Which a 5/1 adjustable rate mortgage, if you don't know by now, it stays fixed interest only for 5 years and then adjusts accordingly to the cap on your product year after year after that. So for instance, if you saw a 7/6, that would be 7 years interest only fixed, and then it's going to go ahead and adjust every 6 months afterwards. So it's not 6 years, it's every 6 months. 5/1 will be a 5/1 every year after that. But let's go ahead and get on with it. 30-year fixed. As of today, we're going to have some good news. Good news is that we are all in the green for today, or no change. 30-year fixed is sitting at 4.78%, which is better pricing by 0.01% from yesterday, 0.0% increase from 1 week ago, 0.74% increase from 1 month ago, and 1.36% increase from 1 year ago. 15-year fixed is going to be sitting at 4.13%, 0.02% better pricing than yesterday, 0.06% increase from 1 week ago, 0.76% increase from 1 month ago, and 1.28% increase from 1 year ago. 30-year FHA is going to be at 4.37%, which is 0.01% better pricing than yesterday, 0.01% better pricing than 1 week ago, 0.74% increase from 1 month ago, and 1.49% increase from just 1 year ago. 30-year jumbo is going to be sitting at 4.15%, which is no change from yesterday, 0.05% increase from 1 week ago, 0.55% increase from 1 month ago, and 0.81% increase from 1 year ago. 5/1 adjustable rate mortgage is going to be sitting at 3.91%, which is 0.01% better pricing than yesterday, 0.06% increase in pricing from 1 week ago, 0.22% increase from 1 month ago, and 1.16% increase from 1 year ago. So those are your mortgage rates. So just to give you a perspective of exactly how mortgage rates are actually affecting everything, we actually had the pending home sales as of March of 2022 has actually taken the 4th monthly hit. So that means that pending home sales have declined, well, obviously because buying power has decreased. So this will be the 4th consecutive month, which February is kind of the worst. According to the National Association of Realtors, pending home sales index has lost its ground in the meantime. The index is actually based off of purchase contracts for existing home sales and houses and townhomes and condos and cooperative apartments, declined from 109.4 total to 104.9, which is a 4.1% change in the red direction. Not that great. Let's go ahead and see what else is going on, and then which is also, myself included, mortgage banks' profits declined substantially in Q4, which obviously everybody knows that we haven't taken as much. You know, the refinance boom was such a big thing. Now these include subsidiaries and non-depository institutions, which is the IMBs, which is independent mortgage brokers. Independent brokers are myself. That we have actually on as a base platform on all of them actually took an 83% decrease in Q4. So yes, prices, the interest rates have increased. Yes, me, myself included, and according to the Mortgage Bankers Association, which I am part of as well, we actually all took a little bit of a hit. Let's not sugarcoat it. It hasn't been a little bit of a hit. It's actually been quite a bit. This doesn't mean that the industries were unprofitable. Just 76% of the study reported a pre-tax profit. The number falls to 58% if the income from the loan services factor out. Notably, 92% of reported profits in Q3 of 2021. Now, in hindsight, not in hindsight, but to give you an idea, also the average cost per loan has also increased. Okay, so the average cost to originate a mortgage has now risen for a 6th quarter in a row, reaching a steady high of almost $9,500 per loan by the end of 2021, and they're steadily increasing. Now, this is also separated from one or two things. So in the world of mortgaging, we have two types of products. We have a qualified mortgage products, which falls under the Fannie Mae and Freddie Mac guidelines, and we have non-qualified mortgages, which are, you know, different insuring bodies that go ahead and insure these non-qualified mortgages, whether you have a bank statement loan or a DSCR loan, which is a debt service covered ratio loan. In case that you are trying to, you know, buy an apartment complex, or you're trying to buy a 3-plex, a 4-plex, whatever it might be, it has actually gone it actually has increased. Of course, I don't do that. So if you did need any help with any mortgaging assistance, link in the description below. We're trying to keep ours as low as we possibly can with trying to at least be somewhat profitable. Pre-tax production has went from 38 basis points. So whenever you hear basis points, it's just a percentage. You just take the decimal point and put it over it a couple of times. So in quarter 4, it has went from pre-tax production profit 38 basis points in quarter 4, and it has went to 89% basis points in quarter 3. So we have actually declined very dramatically. Total production revenue has decreased too from quarter 3 to quarter 4, actually from 396 basis points, that's 3.96, to 353 basis points. So that is your mortgage rate update, giving you a little context of everything. Also, another thing to note is going to be the revenue per loan. How much do you make per loan that you go ahead and do? So in quarter 3, we're actually doing about $11,734 on average revenue per loan. And it's actually dropped, even though the loan production that, you know, the basis points that origination has increased is gone up. Just the servicing of the loan, it's actually cost more or cost less to go ahead and do it, which has dropped down to $10,569 in quarter 4. Total loan production expenses has increased from $9,100 to $9,470. So yeah, hasn't looked too great, but those are the numbers. Those are the mortgage rates for today. If you didn't need any assistance in mortgaging, link in the description below for 0% finance or 0% listing fee and selling your current home in the state of California. Link in the description below, and for up to 50% commission rebate on your next property. And of course, we go ahead and help you out, because God knows everybody needs a little extra cash whenever you're trying to purchase a new home. Link in the description below, and by all means, just remember, we do loan products that are unheard of, that a lot of people do not do. We're very high in the non-qualified mortgage products, so we do 100% financing. So that means you have no down payment, you have no nothing, you just have to go ahead and cover your closing costs. We do debt service, we do bank statements, we do construction loans. I do all of it. So if you do need any assistance with it, link in the description below, and appreciate you watching. Till next video, guys, thank you again.